Hello friends, welcome to the special mini marathon. Yesterday's mini marathon you followed module A. I covered many important topics over there. Kindly note, I covered the LC transaction full. LC transaction, kindly follow it without fail. Plus I covered some Forex numericals, Forex basics. Very important session yesterday. And Today also I will be covering module B. Now what is module B? See here, complete module B, it's not possible, but what I'll do is I'll cover mainly three risks which are everywhere. They are there in your module B also, somewhere module D also. I'll be covering all the three risks: credit risk, market risk and ops risk. Various theory questions I'll be covering, some numericals I'll be covering. So watch the video till the end, share it with your friends, like this video, okay? Do it fast. Kindly note, first, see a very important part is all the three risks are equally important. I'll be covering first, let's say I'll be covering ops risk, ops risk I'll cover first. Is it ops? Yeah, ops. First I'll cover ops risk. Then in sequence is credit risk, and then I'll cover market risk. So follow it completely. Very important questions are taken in this. These questions are repeated in the exam. Kindly note this. These are repeated. So that's why follow it till the end. First, let me change the format today. Every day what do? I explain theory first, then I go for the objective questions. Let's do objective questions first. Which of the following is not one of the Basel II framework's techniques for calculating operations risk? Not, okay. Understand the question, not. You want not, okay? Not, this is what you want. Basic indicator, standardized approach, AMA, advanced measurement approach, foundation, internal rating based approach. Which one of them is not the method of calculating operations risk? Let me see. Read it everyone. Which of them is not? Okay. Not the method of calculating operations risk. Basic. So basic indicator approach, it is there. Standardized approach, it is there. AMA, it is there. FIRB, it's not there. This is for credit risk. Credit. This is used for measuring credit risk, not for your ops risk. Okay. Ops risk has only these three methods. Even this is getting replaced now. This is getting replaced. Okay, this AMA is getting replaced now. They are coming up with a new method, something standard, something. Okay. Does anyone know the name? They are coming up with AMA is getting replaced with what? In the paid classes I have taught it. So what is the answer for this? Answer for this is FIRB. This is for credit risk. Credit risk has three methods. Okay. One is standardized we call it, standardized. Okay. Then FIRB, foundation internal rating based. And last one is AIRB, advanced. Now same. AIRB, advanced internal rating based. Okay. So these are the three methods for credit risk. These are the three methods for this ops risk. Okay. Market risk, they are different. There are actually two methods only. Three are there. In standardized, there are two standardized methods in market risk. That we have covered separately. Okay. Next. Internationally, a committee approach to risk management is being adopted. Which committee deals with the different types of market risk and let me call it ops risk now. Which committee deals with ops risk? So which committee deals with ops risk over here? Think over it, everyone. Yes? Ops, you want ops risk. Which committee deals? Is it ALM? ALM deals with what? ALM deals with market. It's called as ALCO, market. ALM deals with market. CRMC means what? What is the full form of CRMC? Comment section. Credit Risk Management Committee. Credit Risk Management and Committee. Okay? Credit Risk Management Committee. This is CRMC. Liquidity Policy Committee. There's no committee like this. This is totally out. Some bank can have their own internal committee. Means I can have a committee for bathroom committee. I can have a sweeper committee. And is this a risk committee? I can have 1,000 committees. What is internationally accepted? That's important, isn't it? I can have a committee on this canteen of mine. Anything. Internal you can have anything. Right? What is universally accepted? ORMC. ORMC means what? Same full form. Only it is Ops. Ops Risk Management Committee. ORMC. So definitely it will be looked on by this ORMC. Operations Risk. Right? Operations Risk is looked on by ORMC. Credit Risk is looked on by CRMC. Market Risk is looked on by ALCO. Okay? Actually, the framework is like this. Let me show you. In any bank, the framework is like this. There is top board of directors. Below BOD, you have RMCB, Risk Management Committee to board. RMCB. This is a Risk Management Committee to board. It directly supports the board in all the efforts. Whatever they want to do now, it is all done by RMCB. Below RMCB, there are three committees. These three. ALCO, CRMC and ORMC. Below these three, there are something called as support groups. They support these committees. Support. Okay, support groups. So this is the overall structure of risk management committees in banking throughout the world. Throughout the world, you go it in any country, the same structure follows. Names can be slightly different. Somebody can call this Credit Risk Management Committee as Credit Policy Committee. Somebody can call this Operations Policy Committee. Anything. Names can be different. What's there in the name? Shakespeare. Right? But function is important. Okay? Got it? Next one. So what is the answer for this? ORMC, right? Next. A bank sanctioned. Now this is a very tricky question. Everyone have a check on this. Read this first. A bank sanctioned a term loan of rupees 10 lakh for a period of 7 years at 3% plus base rate of 9%. The funding of the loan is from a 3-year deposit at 7%. Up till now this is clear. While processing the loan, the branch missed on getting the mortgage done. The loan went into NPA. So it is what risk now? Now the loan has gone into NPA. There is always a very small tricky line in this question. Everything else is of no use to you. That bank sanctioned a loan of 10 lakhs for 7 years, base rate 9%, deposit is 7%. All this is crap. Question is really different. Question is only this: missed on getting the mortgage. Missed on getting the mortgage. You'll say, how can the bank miss on getting the mortgage before giving the loans? It happens. There are many cooperative banks who don't even mortgage. I have seen personally right now, this year. It's not some old ages of 1990 or 2000. Today, there are many banks who miss out on taking the mortgages. This is what type of risk? The loan has went into NPA. So this is basically your ops risk, isn't it? Basis risk, reputational risk, all of the above. Forget it, all these things. Operations, you have missed it. Very simple. Why did you follow it? Who checked it? What was the checklist? Where's the checklist in this? Yeah. So these things are to be answered. Here, ops risk can be managed, kindly note. Operations risk in any bank can be managed if you have a proper checklist. You need to have a proper checklist, okay? So, operations risk. This is the only crux of the problem. Remaining everything is okay. Now, let's do some theory part. Operational risk here, questions we did. Now I have reversed this time. Every time what do? We first cover the theory, then the objectives. Now we have covered the objectives first, now the theory. Let's see how you like it, isn't it? Operational risk. The risk of loss due to internal failures. In fact, I am having some questions. Don't think that questions are over. Few questions I will be still taking. The risk of loss due to internal failures, employee errors or external event. This is related to this earlier question. So this missed out. Okay, that's why I have taken this over here. The risk of loss due to internal failures, employee errors or external events. Okay, means employee errors. This is an employee error. Then operational risk can include fraud, technology failure. So these are the other things which can be included. Fraud, technology, cyber security. Okay. Operational risk can be managed by improving internal systems, controls and training employees. Systems, controls, checklist here. Everything is checklist. Everything is checklist. If you have the checklist and follow the checklist, ops risk and credit risk can be controlled. Ops risk and credit risk can be controlled. Market risk you can't control that much, but ops and credit can be controlled. So this is basically the logic of operations risk. Okay, got it? So employee errors, fraud, technology failure, cyber security, then internal systems, controls, training employees, everything. By any which ways, your branch will be closed or you can't service the customers. Okay. Next. RBI has issued internals here. I told you the questions are there. RBI theory I'll be covering it some part later. RBI has issued internal control guidelines for foreign exchange business. Under ICG means internal control guidelines, which of the following limits is not required by banks for forex operations? Again, here comes the operations risk. Which of the limits are not required? Because what did I say? Checklist. Checklist is over here. Which of the points are not there in the checklist, not required in the checklist? Overnight limit, daylight limit, exchange limit and gap limit. Now we are talking of only operations risk. Okay, we are only talking of operations. So which of them is not included in the operations risk? Overnight, daylight, exchange and gap. Yes. Okay. Answer this. What is overnight limit? Overnight limit means this is called an EOD position. EOD. We have this cash now in cash. In our daily cash, in our branch, we have this overnight limit. We call it volt limit, right? Volt limit means this overnight limit. Same thing is there in Forex also. Okay. You have overnight limit or EOD limit for every dealer, every trader. Okay. You have overnight limit for every trader. Daylight limit means during the day, how much Forex can you handle? Same thing is there in a branch also for cashier. Can the cashier tomorrow bring the whole cash from the vault and keep it in the teller area? No. There's a limit given to this person, daylight. Okay. So that is daylight limit, overnight limit, exchange limit, gap limit. Now what is this? One of these two is not there in this operations, Forex operations. Exchange limit, see here, exchange, Forex, foreign exchange. So exchange will be there. So exchange limit is there. Foreign exchange limit for each currency is given. What is the exchange limit? Each currency, how much can you handle? Each currency. Okay. So that is exchange limit. I can have this much limit on dollar. I can have this much limit on pounds. I can have this much limit on Australian dollars. Okay. And what is gap limit? Gap limit is not the part of your operations. Gap limit is related to your this market risk. Okay. This is totally different from the Forex operations. Got it? Gap limit means your mismatches, basically mismatches. Gap limit comes when you have mismatches in the maturities as well as in the amounts. Okay. There gap limit comes. So this is not the part of your ICG for Forex. Only for Forex I am talking. Next, a huge strike. Now read this. A huge strike is taking place in a factory in Rajasthan. The materials which need to be exported are not ready by the deadline. In this case, which type of international trade risk is experienced by the buyer in Seattle, USA? So the buyer is in USA. Goods are exported from our country, Rajasthan. Now, which type of risk is experienced by this buyer? Yeah. Is it political, shipping, exchange, or operational risk? What did we see in the operations risk earlier? Let me show you. See this. Fraud, technology failures, cyber security, then employee errors, external events, internal failures. So this strike is a part of this part, internal failures, external. All these two. Okay. So this huge strike is a part of your operational risk. Okay. Operational. Got it? Which of the following is an important factor for limited hedging of operational risk? Important factor for limited hedging. What is limited hedging? Firstly, what is hedging? Hedging means controlling the risk. How do you control the risk? Yes. How do you control the risk? Operations risk. By preparing the checklist. By giving training to the employees. Just now we saw it. Training to the employees. So, limited hedging of operations risk. Absence of commercial vendor to sell operational risk data. Absence of commercial vendor, which is an important factor, means what are the factors? Okay. Absence of commercial vendor to sell operational risk data. It can be one. Operational risk process correlations are fixed and known to buyers and sellers. So processes are fixed and known to buyers and sellers. Operational risk assessment is an objective and rigid. Okay, is objective means to the point. Objective means to the point. It's very clear, crystal clear. That's known as objective. And rigid, very firm, strong. Identifying operational risk accurately that are not yet apparent is a competitive task. So which of them is an important factor for limited hedging? Limited hedging means controlled hedging, which will affect your hedging of operations risk or limiting of operations risk, which will help. Identifying operation risk accurately. This is correct. So this is true. Absence of, you want a correct factor. Huh? Absence of commercial vendor. If you don't have vendor, then what happens? You can do it internally. Why do you need a vendor? Operations risk is the internal part. So if you are a big company, then you'll be needing vendor. Otherwise, you don't need it. You need internal employees. So this is not the main factor. Operational risk process correlations are fixed and known to the buyers and the sellers. What happens by knowing to the buyers and sellers? Buyers and sellers, how will they affect the operations risk? Buyers and sellers are external parties. Operations risk is related to your internal system. Again, no relation. Operations risk assessment is objective and rigid. Rigid. Objective is okay. Objective I understood. What about rigid? You don't change it. Rigid means once done is done. No changes. You can't have any rigidness in anything in life. You have to keep on changing. Okay? So, operations risk, rigid, not allowed. So the answer is this only, isn't it? Identifying operational risk accurately and that are not apparent is a competitive task. Competitive means what here? Whatever is going on in the market, as per your competition, you have to be in that race. Whatever others are doing, you have to do that. Okay? So identifying operational risk accurately that are not yet apparent is a competitive task. So this is the real factor. So this is the D answer, right one. Okay? Now let's come to the theory part. Operations risk theory is also equally important now. Kindly note. Theory will be covering some important parts. What are the operations risks? What are the causes? How to manage it? Very important terms will be covered over here. Operations risk in banking is the risk of loss that can occur due to internal or external factors. These losses can be financial or non-financial. So internal or external, what is internal factor? Internal factor means internal or external factors, this one. Internal means your employee factors. External means external is not related to market. External is related to your floods, dacoity, theft, terrorist attack. These are also operational risk. Okay? These losses can be financial or non-financial, both financial or non-financial. Non-financial means what? It is known as reputation, reputational risk. Reputation. Tomorrow, if in the whole banking world, the name goes that your banking software are very lazy softwares, very slow softwares. Tomorrow, if the whole world comes to know about some bank, what will happen? Will you go to that bank? If tomorrow you come to know that some bank software is very slow, it requires a lot of time, will you go there? Definitely not. So this is non-financial, directly non-financial. Sure, indirectly it will be financial only. If you don't go, it means what? You will definitely lose the customers, isn't it? So ultimately everything relates to finance only. Even reputation risk relates to finance, isn't it? What are the causes? Internal fraud. Very important. Many a time this problem arises. Internal fraud. Many times internal fraud. Majority of the frauds in the bank are somewhere related to some employee. Either intentionally or unintentionally. Somewhere they are related to the employee. So internal fraud. Okay? When the employees steal, embezzle or engage in other fraudulent activities, okay? Steal, rob, okay? External fraud, when there is third party, means actually employee is not involved. Third parties such as clients or hackers commit frauds. Nowadays this hacking system is very common, isn't it? So hackers are a major problem nowadays in online banking. That's why many of us say that no, don't do online banking. Fraud होते हैं बहुत, पैसा कहाँ जाता है मालूम नहीं पड़ता. We don't know. Somebody in America will steal your money. Don't. These things will happen. For that you have insurance also. Somebody steals your money, you'll get it back from the insurance company immediately. Okay? Systems and process failures. Systems not working. Internet link नहीं है. You commonly see this ना in your bank. Link नहीं है. Sir, system क्यों नहीं चल रहा है? Sir, cash ले लो ना. Link नहीं है. I had seen in one bank, when one of the biggest banks, biggest private banks, I won't name it now. I went to the bank, private banks, not nationalized banks, private banks. I went there and link was not there. I told the cashier that, see, okay, link is not there, it happens. What do? You take my cash, give me the slip, receipt, and you make the entry till the day end. Whenever link comes, make the entry. No. When link is not there, we can't take the cash. I said, what? Yeah, we can't take. How can we take the cash? What is the problem? Wasn't there cash transaction before internet banking or before computers? Wasn't bank working before computers? I called the manager. Manager was one step ahead. No, not at all. We have an audit requirement. Our audit has told so that you cannot take the case. I said, oh my God, such a great news it's for me. I told him, give me the audit report. Show me the audit report. Okay, I told him one basic step give me. Give me in writing right now that I can't accept the cash because my systems are not working. Give me in writing. Let's see. Which audit will tell you to not accept the cash when the systems are not working? Illogical. It's in private banks. So don't think private banks are something better or something, nothing. Many times everything depends on human being. Okay, what type of human being there it is we are facing. Okay. So coming back to the point, internal fraud, external fraud, system failures. Here, operations risk, every time it happens in the banking. Only the question is, how do you handle it? Link not there. So will you keep the customer waiting? If it is very serious, means that related to system only, then you can keep the customer waiting. You can tell the customer that, see, so and so has happened. So that is force majeure, means beyond our control. Okay. Employment practices and workplace safety. This is also one of the reasons for happening of this ops risk. When the employees are discriminated, injured, labor laws are violated, this thing happens. Injured. Many times there are attacks. You see, mainly the attacks you see in hospitals. If some patient expires in the hospital during the operation or anything, people are very wild against the doctors. Injured. Same thing happens in bank also. If you make some error means something error happens due to systems or anything, and customer loses money. I have seen this experience. I have done this personally. I have seen the experience. There was a fight between the bank employee and the customer, and customer literally almost he kicked this employee in the branch itself. Injury. Why? Because of something was not done. Okay, it might be due to anybody's fault. It can happen. Even the employees are so much stressed up nowadays. Sometimes it happens, but it should not happen. Literally, I'll tell you, it should not happen because we are being paid for the same. Okay, so it should not happen. But sometimes if it happens, and you shouldn't get on to these fights. No customer, no employee. Even from the employee side, I would say the same thing. So injuries, labor laws are violated. Regulatory compliances, when the bank fails to comply with the regulations, RBI regulations, SEBI regulations, IRDA regulations, anyone can fine you now. There are so many regulators and bank is involved in so many institutions or the businesses now. Bank is involved in insurance, mutual fund, then RBI is obviously there, SEBI, share market, RBI is involved, banks are involved. So anyone can punish you today, compliance wise. Cyber security, this is the main problem which we are seeing nowadays, isn't it? When the bank cyber security is compromised, means somebody steals the money. You see these Nigerian frauds, these are the same things. Third party risks. Third party risk means again, when the bank's relationships with the third parties are not managed well. Who are these third parties? Do you mean to say that insurance, third party means we immediately know, third insurance, mutual fund? It's not that. It is vendors. Vendor.